Silver is making headlines. Just recently, it hit an all-time high of nearly $70 per ounce. This precious metal is now on the radar of serious investors and everyday people alike. Many experts are talking about something bold. Silver could reach $100 per ounce in the next 2 years. To understand why, we need to look at two big forces pushing silver higher. One is the Federal Reserve cutting interest rates. The other is a severe shortage of silver in the world. These two forces are working together like never before. Let us explore what is really happening. The world has changed. Silver prices have nearly doubled in just 1 year. This is not a small move. This is a dramatic jump that catches the attention of markets. Gold got a lot of attention because it is famous. But silver is quietly outperforming gold. In 2025 alone, silver surged around 90%. Gold rose about 60%. Silver is winning the race. Most people are not paying attention. This could be the biggest opportunity many investors have missed. The reason? Two powerful forces are colliding. What is the Federal Reserve and what are rate cuts? The Federal Reserve is the central bank of the United States. It controls interest rates. When the Fed cuts interest rates, it means money becomes cheaper to borrow. Banks offer lower interest rates on savings accounts. Credit cards cost less. People are encouraged to spend and invest. This is good for non-yielding assets like gold and silver. These metals do not pay interest or dividends. When rates are high, stocks and bonds are more attractive because they pay you something. When rates fall, precious metals become more valuable. They become a safe place to put your money. This is the monetary force pushing silver up. The Federal Reserve has been cutting rates. In December 2025, the Fed cut rates for the third time in the year. The benchmark rate fell to 3.5 to 3.75%. This is down from much higher levels earlier. The Fed also signaled it might cut rates again in 2026. Markets expect more cuts to come. This environment is perfect for silver. Every time the Fed cuts rates, money flows into precious metals. Investors pull money out of savings accounts and bonds. They buy gold and silver instead. This pattern has happened before. In 2000, when the Fed was cutting rates, gold rose 31% within 24 months. In 2007, gold jumped 39%. In 2019, gold climbed 26%. History shows us the pattern. Rate cuts equal precious metal gains. But rate cuts are only half the story. The other half is supply. This is where things get really interesting. Silver is facing something almost never seen before, a structural shortage. This means demand keeps growing, but supply keeps shrinking. This gap has lasted for 5 years now, and it looks like it will continue into 2026. Think about the silver supply problem. Most silver does not come from silver mines. Most silver is a byproduct. When mining companies dig for copper, zinc, or lead, they find silver too. About 75 to 80% of silver production comes this way. This means silver mining is not very flexible. A mining company cannot just dig more silver because the price went up. They dig for copper or zinc. Silver is just what they find along the way. If copper prices are too low, the mine closes. The silver stays in the ground. This is why higher silver prices do not automatically mean more silver supply. Supply is stuck. It cannot grow easily. Meanwhile, demand is exploding. Silver is not just a precious metal anymore. It has become a critical mineral. The US government officially named it a critical mineral in 2025. This matters because it means silver is now essential for national security. But more importantly, silver is now essential for technology. Over 70% of silver goes into industry. Very little goes into jewelry anymore. Solar panels need a lot of silver. Electric vehicles need silver. Data centers for artificial intelligence need silver. Every electronic device with an on and off switch needs silver. The world is going green with solar panels. The world is filling with electric vehicles. Artificial intelligence is growing fast. All of these things need silver. A lot of silver. The numbers tell the story. Silver industrial demand hit a record high in 2025. For the first time ever, industrial demand exceeded 700 million ounces in a single year. Solar panel manufacturing alone takes huge amounts. A solar cell uses about 12% silver paste of its total cost. That is a lot of silver in a single panel. Multiply that by millions of panels being installed globally every year. Add electric vehicles using about 50 grams of silver each. Add data centers building new infrastructure for artificial intelligence at 1.2 kilograms of silver per cabinet. The demand numbers are staggering. There is no way to match this with current supply. The shortage is massive. From 2021 to 2025, the world has experienced 800 million ounces of supply deficit. That is like losing an entire year of global silver production. 800 million ounces gone. The gap between supply and demand keeps getting bigger. In 2025 alone, the shortage was about 117 to 150 million ounces, depending on which expert you ask. In 2026, the deficit is expected to continue. Experts say it could stretch into a sixth consecutive year of shortage. This is unusual. Most commodities do not have this kind of consistent shortfall. This is a structural problem that does not fix itself quickly. Look at the inventories. London Metal Exchange inventories have collapsed to historic lows. Registered stocks at the COMEX exchange dropped 70% from their peak in 2020. When inventories get this low, panic buying starts. Companies that need silver are scrambling to lock in supplies. They do not want to run out. This creates rush buying, which pushes prices higher. In October 2025, the London market nearly ran out of physical silver. Gold faced a similar problem earlier. This was a real crisis moment. Silver borrowing costs shot up to 200% annualized. That means it became extremely expensive to borrow silver. This extreme cost signals extreme scarcity. Investment demand is also soaring. Investors are waking up to silver. Silver-backed exchange-traded funds saw inflows of about 187 million ounces through November 2025. That is an 18% increase in holdings. Retail investors are buying physical silver coins. These coins trade at double-digit percentage premiums over the official spot price. People would not pay these premiums unless they believed prices would go much higher. Trust in government is shaky. People worry about inflation. Currencies are weakening. People want hard assets. Silver fits perfectly. It is physical. It cannot be printed. It has value across borders. The two forces we talked about are mixing together. Rate cuts push investors toward precious metals. Supply shortage makes that buying pressure incredibly powerful. Less available silver makes each buyer more aggressive. Prices spike. The spike pulls in more investors. More investors want to buy more silver. Supply stays tight. Prices jump again. This is a positive feedback loop. These loops can create explosive price moves. Now we get to the big question. Could silver really hit $100? Some say yes. BNP Paribas, a major bank, suggested silver could climb as high as $100 per ounce by the end of 2026. Other analysts are less bold, but still bullish. Bank of America raised its 12-month target to $65. They see silver reaching higher, and the journey from $69 to $100 is a 45% gain. Could that happen in 1 or 2 years? The math says maybe. Silver has already doubled in 1 year. One more big push could get there. Several scenarios could push silver to $100. First, more Fed rate cuts would help. If the Fed cuts rates faster than expected, money flows into silver even faster. Second, a real crisis could happen. A geopolitical crisis could send safe haven flows into precious metals. Third, supply could tighten even more. A major mining accident or disruption could cut supply suddenly. Fourth, industrial demand could accelerate. A major breakthrough in solar technology could spike demand overnight. Fifth, investor panic could set in. If confidence in currencies weakens, investors rush into gold and silver. That panic buying can push prices to extremes. History shows us that severe supply shortages plus safe haven demand can create wild prices. When conditions line up right, prices can jump faster than most people expect. Silver is set up for this. The shortage is real. The demand is real. The rate cuts are happening. The fear is real. These ingredients have created explosive price environments before. They could do it again. But there are risks. What could stop silver? First, a major rate hike would hurt. If the Fed suddenly decides inflation is too high and hikes rates, money would flow back into bonds. Bonds would pay interest again. Precious metals would fall. Second, a strong dollar would hurt silver. If the dollar strengthens, silver becomes more expensive in other currencies. Demand drops. Third, a mining breakthrough could happen. A new silver mine could come online and increase supply. Fourth, a technology breakthrough could reduce silver use. Scientists could find a substitute material. Fifth, economic collapse could hurt demand. If the world goes into deep recession, people would not buy solar panels or electric vehicles. Industrial demand would crash. These risks are real, but not likely soon. The Fed is in a soft mode. It is not talking about hiking rates. The dollar is weakening, not strengthening. No major new silver mines are starting production in the near term. Substitutes for silver are hard to find. Economic recession is possible, but not the base case. The risks exist, but seem distant. So what does this mean for regular people? First, silver is no longer a boring investment. It has become exciting. Second, the risk reward is favorable. The price is not outrageous yet. Plenty of upside could remain. Third, silver is for real. It is not hype. Supply is short. Demand is strong. The math works. Fourth, patience could pay off. If you invest in silver now, waiting 1 or 2 years could bring big rewards. Fifth, diversification matters. You should not put all money in silver, but some allocation to silver makes sense. Gold is the king of safe havens. Silver is the prince. Both deserve a place in a diversified portfolio. What is the smartest way to buy silver? You have choices. Physical silver coins and bars are popular. You own the metal. You can hold it. But it costs money to store and insure. Silver ETFs are easier. You buy a fund that tracks silver prices. No storage needed, no insurance needed. You can sell anytime. Futures and options are for experienced traders. They offer leverage, but also large risks. Most people should stick with physical silver or ETFs. The timeline matters. Silver could hit $80 or $90 within months if conditions accelerate. $100 might take 1 to 2 years, but these timelines are not certain. Markets move in unpredictable waves. Be ready for temporary drops. Price does not go straight up. Sometimes silver will fall 10 or 15%. Do not panic when this happens. The long-term trend is up due to supply and demand. Short-term noise is just noise. The broader picture is important too. This is not just about silver getting expensive. This is about the world needing silver for its future. Solar panels will power our homes. Electric vehicles will replace gas cars. Data centers will run artificial intelligence. All of these need silver. The world cannot build its green future without silver. Supply cannot keep up. This is a fundamental mismatch. Prices must rise to reduce demand or increase supply or both. Higher prices are not optional. They are inevitable. This creates an unusual situation. Silver is both a safe haven and an industrial necessity. It appeals to worried investors who want to protect wealth. It also appeals to industrial users who need it to function. Both groups are bidding on the same product. When both groups want more at the same time, prices can move very fast. This is what 2025 taught us. 2026 could bring more of the same. The experts are watching. Mining companies are studying their options. Some are trying to bring new silver production online, but this takes years. Most will not produce significant silver before 2028 or later. In the meantime, the shortage continues. In the meantime, prices stay under pressure. In the meantime, investors wait and watch. $100 per ounce silver. It sounds like a big number, but context matters. At $100, silver would still be far behind its historical peak, adjusted for inflation. Silver touched nearly $50 per ounce back in 1980. Adjusted for inflation, that would be over $200 in today's money. So $100 is not crazy. It is not even close to the ultimate potential. The bottom line is simple. Silver has two huge things working for it. First, the Federal Reserve is cutting rates. Supplies are tight. Both factors push prices higher. Neither factor is going away soon. Both could get stronger. When structural supply shortages meet safe haven demand, the results can be dramatic. Silver is positioned for something big. $100 might happen. It might not, but higher prices from here seem very likely. The question is not whether silver will be worth more. The question is how much more and how fast. The Fed rate cuts say, look to precious metals. The supply shortage says silver specifically. Put them together and you get real opportunity. Silver could explode. Many experts think it will.